All right. Thank you for joining today's Wize coaching call. Oh, and we also got Mina joining us, trusty Mina. All right. Today, in our Wize coaching call, the same as every other, I want to start by first, welcoming and thanking Raul, our Wize Hub's coach, for joining us today.
Thank you, Tom. Hello, everyone. Happy Monday from Mexico.
Yeah, happy Monday from Mexico. And Danny, our head of Wize Talent. Thanks for joining us today, Danny.
Thanks, Thomas. Hi, everyone. I'm glad it's not Monday now. I'm glad we've moved past that now on to Tuesday.
Yeah, it is Tuesday. I was confused.
Yeah.
I was confused for a second there.
Yeah.
No. Here is Monday.
Yeah, you're right. Tomorrow's bin day, so I better put the bins out tonight. Okay, Selena, thank you for joining us. Selena's a bit under the weather, but she'll be, she braved it out here today to help us. Thank you. All right. Well, just want to make sure, can everyone see my screen just fine to the slides? Yeah. Okay. All right. So today we're going to be diving in today's topic of driving success with the right metrics. Specifically, we're talking about the Fab 5 metrics. All right. And we'll be going over them at a high level. And then I'll share some interpretations and some examples of different ways I've seen the Fab 5 appear to me in my mentoring sessions. So hopefully we can have like a deeper discussion on the Fab 5 for all those that are really well acquainted with it already as well. Okay, but I'm going to start from a high level. And it'll be really great if everyone kept their cameras on and keep yourself muted for now and use the chat box for any questions and comments. Okay. All right. And thank you for joining us today, Yvette, Justin, and Chris. Good to have you here. Okay. And for all of those who haven't met me before, I'm Thomas. I'm a Wize mentor at Wize and have been for almost 6 years now. It's crazy. It's crazy. But yeah, happy to take you through a very crucial topic today on the Fab 5. All right, so we're going to be breaking down the 5 key KPIs that define an accounting firm. Okay, and just before I go into these specific 5 KPIs and explaining them, you're probably wondering why these 5? Why these particular 5 KPIs? How about all the other KPIs like number of returns completed this week, or number of returns lodged this week, or recoverable rates, or whatever else? Why these ones specifically? Well, the best way I've interpreted this and explained this to other firms is it's all about the role that you hold and sit in within your accounting firm. And these 5 KPIs in particular, they're meant for partners. They're meant for owners. They're meant for general managers, managing partners, CEOs, and the board of directors. Okay, so these KPIs sit at a high level and they pretty much cover the full spectrum of what is happening in the firm. Think of it like a rainbow. How many colors are there in the world? Infinite. I mean, they're not infinite, but heaps, okay? There's millions. But when you think of the colors of the rainbow, you go, I don't know the colors of the rainbow, but what is it? Blue, yellow, red, green. I think there are like 5 or 6 of them. I'm not sure. But we don't go and list out every single color combination. But within each of those main colors, it describes, within them, it has millions of other subcolors. And that's what the Fab 5 KPI is. When we're looking at revenue, within it, it represents productivity. It represents billable rates. It represents recoverable rates. It represents your billing. It represents so many different things. So these 5 KPIs, each of them, they sit at a really high level. And the way we use them is if any of these KPIs fall below a certain benchmark, then we begin going in and unpacking it. Okay, then we go into it and we start drilling in and taking a look at the details, trying to get to a specific person's productivity levels. But what we can't do as owners is stay across 100 KPIs constantly. It's impossible. It's really hard. I don't know. I don't know if anyone can really do it. I don't know if anyone's traded shares or followed sports. You can't keep track of 100 different sporting teams at the same time. You can't keep track of 100 different shares at the same time and intimately remember their prices. Same goes for the Fab 5. We need to keep things lightweight. We essentially need to abstract the low level, small details into a higher state so that we as owners don't get paralyzed by the information. It needs to stay high level so that we can be decisive, that we can make, it comes down to the 80-20 rule, okay? It's not important, it's 20% of the KPIs produce 80% of the impact when we make decisions on them. And these are what they are. Okay, so that's just a bit of an intro into the KPIs because, a lot of people have asked me why these ones specifically, can't we tailor them? Now, another overview just to the Fab 5 is it doesn't just cover financial data, okay, in the sense of the P&L. Okay, it's not just covering the income and expenses and profitability. We're also tracking the fees won and lost. We need to be able to track how the business is changing overall, not just what it is in its current state. Are we converting people? Are clients happy? It gives us the ability to have foresight, okay? And that kind of just goes back to being decisive as a leader. All right, so I'll just get right into it now. And we'll have Raul here to take us into the Fab 5 itself soon after to give us a bit of a demonstration on what it looks like inside the Wize Hub. So the Fab 5, it stands for the revenue, profitability, fees, won and loss, leads to new clients, and the client NPS. Now, actually, what I might do here is, Raul, do you mind sharing your screen
Yes.
to the 5 actually, and I'll go over the explanation because, yeah.
Can you see my screen?
Yep, I certainly can. All right, beautiful. Okay.
This is Tom, an executive view. So this is how every single owner should be looking at when they open their Fab 5.
Yeah, this is a really great new view. Let us know if anyone's having trouble viewing this, but yeah, this is our new business intelligence view for the Fab 5. Okay, so let's just start going into it. The first KPI here is revenue, okay? Everyone can see here, we're going to be focusing on revenue here. And with revenue, we're keeping track of what our year-to-date revenue is, and we're comparing it against 2 numbers, okay? We're comparing it against the last year's to date, okay? And as you can see here, let me know if anyone's having trouble seeing this, if it's a bit too small, but that's 2 million, and the last year to date was 1.7 million. And what we're trying to get out of this, yeah, thanks, Raul, that helps. Okay, yep, perfect. Okay, so what we're trying to get out of this is looking at how much have we grown so far this year? Okay, what's our current growth rate so far? And for this particular example, 23 Degrees Accountants, we've grown by 21%. Now, that's excellent. 21% is a great growth rate. But everyone here might have a different growth rate depending on what you planned inside your growth plan in the Wize Hub. And just to explain that, we all have an ideal lifestyle in mind, and we all have an ideal income that we want to achieve in order to fund this ideal lifestyle. We all have a starting point, and when we know what our ideal income is, we can work backwards into figuring out what revenue does the company need to be in order to fund that lifestyle. And from what I've seen in most firms, when they've planned their ideal income, usually they'll say something like 500,000 a year, 600,000 a year in dividends. And they usually give a time range of about, say, 5 to 6 years in order to achieve it. Often that is around a 15 to 20% growth rate. And if a firm wants to achieve their goals any earlier than 5 years, they tend to have to do an acquisition in their second or third year. But 20%, 15 to 20% is what I often see as the growth rate in order to achieve your ideal income goals. So this is really important. We need to be tracking our growth with respect to our ideal income goals. And also, we need to be tracking our growth because our employees want promotions. Our employees want more wages. They want a salary increase of 5%, 7%. Our employees in the Philippines, they want to go from 80,000 pesos to 120,000 pesos. That's like a 50% increase. I looked at it last year. I gave I increased my Philippines wages by like 50 or 60%. It's been growing the fastest it's ever been. And we need to be able to track our growth rate to make sure that are we going to be able to afford that? Are we able to meet the market demands of the labor costs at the moment? So that's the growth rate, and that's what we're getting inside revenue. The other thing that we're comparing the year-to-date with is the year-to-date budget, okay? So this year-to-date budget is a reflection of what we achieved last year, plus some growth, okay? Plus the new fees that we've won, right? And we want to make sure that we're tracking along to our budget as we move through the financial year. And in this case, we are at February, okay? For the Australian financial year, July to February. All right, and in this scenario here, we are 544,000 beyond our budget. We have a surplus, and this is great. Looking at this, we can tell that the firm is billing well, performing well, they're getting work into the office, or their direct debits are nice and healthy, okay? That's the first Fab 5 KPI, and that's just one point of view that we're taking a look at. All right, now the second KPI, profitability. With profitability, we're tracking our cost of goods sold, our year-to-date EBIT, and year-to-date EBIT as a percentage, our write-ons and off, and the percentage of write-ons and off versus the year-to-date EBIT itself. Okay. With profitability, we're always aiming for a cost of goods sold of 40%. That is our benchmark. And what you don't see here is the overheads. Okay. But the overheads, we're looking to achieve between 35% if you have an office to 30% if you're a fully remote firm. And that means that the EBIT that we're trying to achieve is 25% to 30%. It's typically 25%. So for this firm here, we can see that they're kicking all their goals. We've got under 40% cost of goods sold. We have over 25% EBIT, and their write-ons and off, they're in a write-on situation, and that's great. Okay.
Yeah.
What does profitability tell us? Profitability tells us that our accountants and bookkeepers in the production team, they're being well utilized. Okay, cost of goods sold is the one expense that we have the most control over. We can either assign more work to our team, we can let go of accountants if we have a surplus capacity, okay, or you can choose to hold on to them if you're preparing for growth. In this case, we've got 39%. That's nice and healthy. They are within the benchmark there. Okay, and for the right ons and off, this tells us that what we're charging is greater than the total billable charge out that the team is putting into the work. And that's excellent. If we were perhaps looking at a negative number here, like a write-off, that would indicate we could be undercharging our clients. Often it is that we're undercharging the clients, or that the team is inefficient, or any combination of those. Okay, and I'll go through some examples, different variations that I've seen here. But so far, we're looking at a high-performing firm. This is the image of an ideal firm. Okay, for lockup. Lockup, we're looking at WIP balance, debtors, and then these lockup days. WIP balance is very simply the amount of work that is in progress in the office at the moment and what the total value of it is. There are many different interpretations of WIP balance. It could be the total fixed value of the jobs in progress. It could be the amount of billable charge out rate charged into a job at the moment that hasn't been invoiced yet. And that's going to depend on whether you're a hourly rate firm or a fixed fee firm. So WIP balance together with the debtors balance, they go together to calculate lockup days for us. Now, lockup days is more or less an indicator of cash flow. We're measuring this revenue and profitability typically on an accrual basis. Okay, so as you're invoicing them, as it happens, we're recording it. So oftentimes, this revenue that we've achieved so far of 2 million, it doesn't mean that we've fully earned it just yet. Okay, it means we've billed the client for it, but it doesn't mean that we've earned it just yet. And often, if we haven't earned it just yet, that's going to show itself in the WIP balance. If you're ever wondering, are we doing this in cash or accrual? We do this in accrual, and we see what the current situation is by looking at the lockup itself. Okay. So again, this is an ideal firm. Their WIP balance is low, and some might argue that it's too low. Okay, we generally want about 2 to 3 weeks worth of work in front of us. And maybe $100 is just not enough work in front of the firm at the moment. So it's not that 0 is the best for the WIP balance. It's what makes sense for your firm. What I've noticed is for bookkeeping firms that do month-end work, they typically will end the month when they're reporting on this Fab 5 with close to a 0 WIP balance, because they're closing out the WIP pretty much at the end of the month. They're done with everything. For tax firms or advisory firms, what I've noticed is that the WIP balance can be a pretty substantial number. So how much WIP is too much WIP? For me, from what I've seen working with firms, it's relative to the average monthly budget of your firm. So for example, let's say you're a $1 million firm, and that means that on average, your monthly budget is about $83,000. You generally don't want your WIP balance to be greater than half of that, like $41,000, okay? Because what that means is if a new job comes into the office and you're already at $80,000 worth of work, that client might wait 1 month before they get their work back. So WIP balance is really interesting to us because it's also an indicator of turnaround time. Okay, so and it's often WIP balance and write-ons and off, from what I've seen, have been the hardest KPIs to get for a firm. Yeah. Okay, and so that's lockup and sales. Now, with sales, we measure it in essentially 2 main parts. We have a conversion rate part and the net fees won and loss. For the prospects to client percentage one, we are comparing the prospects percentage that they turn into clients. So what is a prospect and how is it different to a lead? A prospect is someone who has had a booking, okay? And they've been presented a proposal. Okay, so a prospect is someone who has had a booking with you or at least done a meeting with you and they've been presented a proposal. A lead is someone who hasn't. Okay, so we're not comparing the leads to client percentage one because some of those leads could be tie kickers. Some of those leads could be undesirable people. We haven't qualified them yet. Okay, we only want to count the people that we've qualified, and we definitely want to send a proposal, and those are our prospects. Now, a general benchmark for prospects to client percentage one for us is 40%. So in this scenario for this firm here, they're a little bit under. Their prospects to client percentage one is under this benchmark of 40%. So what does it mean? It could mean several things. It could mean that their qualifying process for the leads aren't good enough, and they should address that because you don't want to waste precious senior client managing time. You don't want to waste precious discovery meeting appointment slots with people who aren't desirable. Okay, so it could mean that we're meeting people that don't really suit us. It could also mean that we don't follow up these clients. Maybe we aren't very good at closing them. Perhaps they're all qualified and we don't do a good enough job of capturing them and getting them to accept the proposal. Okay, so as you can see, these are all high-level KPIs, like I mentioned, but when a KPI falls below our benchmarks, we begin to ask questions. Okay, then we start drilling into it. Okay, but we're starting from a high level. We're not keeping track of all these different points and arguments and facts and numbers constantly at the top of our head. It's just an indicator for us to start getting into it. And that if they were within our benchmarks, if everything looked pretty good, we're ahead of budget, the profitability is good, our cost of goods sold is under 40%, then there's really nothing to drill into. Like you could go into it if you wanted to, but there really isn't any point. Following the 80-20 rule, it's just fine. There's nothing really to worry about. We really should be putting our attention to things that look worrying or aren't at the benchmark. Okay, so that's sales here. And now with the fees won and lost. So of course, we want to be winning fees more than we are losing fees. But what does this KPI do in terms of decision making? Well, it does two things. And you won't be able to see it in this view, but we're tracking each of these Fab 5 KPIs on a per team basis. Okay? We want to be able to track that which team is losing a lot of fees. And is that correlated with any of the other KPIs? For example, if one team's WIP balance was really high, something like 2 months worth their average budget, and they were also losing fees, and then their client NPS was a 7 out of 10, what does that mean? It means that their clients are unhappy because they're taking too long to finish their work. Okay? It tells a story once we look at one poorly performing KPI and we correlate it with others. It gives us a complete story to take a look at. And they never really truly make sense when we look at it on their own. Okay? So in this case, we're judging senior client manager performance, a team's performance in being able to retain clients. And then secondly, the fees won and lost, these net fees, they help us capacity plan. So suppose we're already at February, where only a few more months until the end of the financial year. So we're looking at this in March, so we've got 6 more months until the next financial year. And so far, we've won $27,000 worth of fees. Well, now we have to go and check for the team that which team has won these fees. Do they have the capacity to meet to service these fees in the following financial year or not? Okay, so net fees won and lost, it helps you gain the foresight in order to make hiring decisions 6 months out, 1 year out. And you might think it sounds ridiculous. Why, if I have to hire someone, surely 8 weeks is enough time to be able to find the right person. I think everyone just shook their head. It's not. But there was a time around, I'd say around 2020, 19, where 8 to 12 weeks seemed like a reasonable amount of time to get a senior accountant as a hire. Nowadays, it's just taking way longer. Okay, so we need to be able to see further out, when do we actually need to start hiring the next person? Okay, so that's one reason why that's one hiring point on why you need to be tracking the net fees. The second reason you need to be tracking the net fees in regards to hiring is because you're getting a lot of net fees. There are some firms that I've worked with, and there are some firms that I currently work with, where their net fees won are 300,000, 400,000 a year. From memory, there was one firm many years ago, she was growing by $1 million in fees every year. That is an insane level of growth. And as you can imagine, when they're planning their capacity, they're not planning for 1 or 2 hires. They are planning for whole new teams. And when they are planning, it's not just, oh, I'm going to plug 2 people in, or maybe 3 people. What they're doing is they're thinking, this person has to be promoted. That person from the other team has to be promoted. They will go and see the new team. And then I'll grab this existing production person and throw it into that team, and then hire another person to go back into that team. It is like a gigantic puzzle. And it's happening very fast. And you imagine when you have a year to try and put an entire team together, how quickly you have to move and how precise your decisions have to be. So your net fees won here are probably the most important KPI you need to track in order to see your capacity plan deep into the future, okay? All right, and the last KPI here, NPS. And NPS stands for Net Promoter Score. And it's, for all those that don't know what the NPS is, it's very simply the question where they ask, on a scale of 0 to 10, how likely are you to recommend our services to your friends or family? So that's for the client NPS. And for the team NPS, it's asking that very same question, but in terms of, would you recommend people to work at our company? Okay. Now, for both of these KPIs, we want to be achieving, realistically, we want to be achieving an 8.5 or higher. But really, you want to be aiming for 9 or 10s. 9 or 10s are promoters. It means that people who are giving you a 9 or a 10, they're going out of their way to speak good things about you. People who are giving you a 7 or 8, they're happy with you. They might recommend you, but they're not really going out of their way to sing your praises. And anyone who gives you a 6 or lower, they're ranging from unhappy and keeping their mouth shut to they're about to leave you and they're actively telling people how much they hate being a client of your firm, or how much they hate being a team member of your firm. Okay, so we need to be tracking this, and that helps us determine whether the client managers of a team are looking after their clients. Are the clients happy with that client manager? Now, studies have shown that customers expect businesses to make mistakes. That's a no-brainer. We expect businesses to make a mistake as well. But what makes a difference is how the business responds and handles those mistakes. Now, some businesses do it terribly, and then the clients are obviously unhappy. But some firms do a good job of it, and they really turn the client around. They go, look, sorry for the mistake. we'll take the fees off for you this year. And next year we'll give you a discount, or how about I throw this in for you, or let's do an extra meeting to go over it. And especially if they're an A or B client, you want to be doing that because you want those people to refer you clients. So why we're aiming for a 9 or a 10 client NPS is, in addition to knowing if the client managers are managing the clients well, we need to be able to, we need to be encouraging and working towards getting referrals for the firm. And referrals and word of mouth are by far the number one source of growth for a firm. Okay? You can experiment with SEO, you can do email marketing, you can do social media, you can do anything. Those forms of marketing are great. It brings a lot of people in from the outside. But what does that matter if the clients that stay with you aren't even happy with your services? So this is what we need to make sure that we get right before we start marketing elsewhere. And then lastly, we have the team NPS. And of course, you want a 9 or a 10 as well. You want employees to be happy working for you. Happy employees tend not to bug you for pay increases. Happy employees tend to be pretty cooperative. Happy employees tend to, sorry, Raul. Happy employees tend to, they tend to be able to tell other good employees that this is the right firm to work for. So you'll find that as it's really hard to hire people, you are going to rely on your existing team members to refer people to you. Okay, so these are the five KPIs from a high level. And as you can see, calling them the Fab Five can sometimes be, it can kind of give the wrong impression that it's just 5 simple KPIs. But as we can see here from Raul showing us this Wize Hub and the business intelligence found in every Wize Hub, there is a lot of detail to it. And this only scratches the high level surface of the Fab Five. We haven't even gone into digging into any of the sub KPIs that we need to look at to actually address these specific things. And that's something that we do within the Wize Growth mentoring sessions itself. So, but we're probably going to run out of time soon. So we'll, we might be heading into a breakout room. So I'm just going to go back to sharing my screen, Raul, to the slides.
Yeah.
Yep. Okay, so just to cap this off, there's a lot to the Fab Five, and how it makes us efficient as a leader is it stops us worrying about every single KPI. Only when a KPI is falling under the benchmark, we start asking questions. Okay? Now, I'll all give us one action point that I suggest taking away in order to start getting the benefits of these Fab Fives and KPIs within your firm. And that is log into your Wize Hub and start setting it up for yourself. Every firm's journey in setting up the Fab Five is different. Some firms find getting their revenue and profitability are easy. Some firms find it hard. Take the exercise of setting up your Fab Five as a way to determine, what actually needs implementation within your firm. If you can't get your WIP balance, is it because you don't have a workflow management tool that's currently being implemented for you to be able to figure this out? If you don't have a client NPS, is it because you haven't implemented one? And maybe you do. Okay, so go through the steps of setting up each of these Fab Five KPIs, and you'll start to find gaps within your own firm, and purely just aim for just trying to get the Fab Five first before you start doing anything else in your firm. It's really the only place where you can tell whatever you're doing is actually working or not. All right, and there are 3 useful resources for you to review in the Wize Vault, and that is 12.1, the live metrics and management reports. The live metrics fees won and loss that I went through, and as well as the fees won and loss policy and procedures, and the Wize budget planner. Okay, so take a look at these and implement them within your firm. They're found in the Wize Vault. Selena will link to them. And yeah, look, let's go into the breakout rooms now, and we'll have 3 breakout rooms here. I'll be taking the Wize Growth mentoring room. So if you have any questions around your firm's growth or challenges that you're facing, I'm happy to answer any and all questions. If you have questions about the Wize Hub and setting up the Fab 5 in the Wize Hub, maybe there's something that maybe you already started doing it and you're running into technical issues, or you want tips on how to get certain KPIs easier, please go into Raul's breakout room. And if you have any questions on hiring, if your net fees one are making you nervous, if you're feeling like, oh, how am I going to keep up with capacity? How am I going to keep up with all this growth? Or maybe I want to grow. I just don't know how to get this hiring thing right. Please go into breakout room 3 and talk to Danny about your hiring strategy, okay? And ask her questions about that. So thank you, everyone. Let's go into the breakout rooms, and I'll see you back here at the hour. Welcome back, everyone. Hope you had a great breakout session with your breakout hosts. So just to wrap things up, if you felt that any of my insights into how firms run, the experiences I've had working together with firms to be able to help them solve their issues and work on their strategy and then scale up was insightful, then you might be interested in Wize Growth. I recommend you hit Selena up, and she'll be able to book a one-on-one strategy call with Jamie Johns, the founder of Wize, who runs now an $8 million accounting firm, to talk to you more if Wize Growth is for you. Like, are you ready for one-on-one mentoring to work on your firm? Okay, so please reach out. And Danny, where is Danny? Danny's not here. Okay. Danny, do you want to share about Wize Talent?
Yeah, absolutely. Thanks, Thomas. Yeah, so if anyone is looking to hire, whether it's onshore or offshore, I'm here to help. We do everything from senior client managers right through to admin and marketing. So happy to help, even if it's just asking me questions about salary guide or whatever it is. Definitely feel free to reach out to me. I've just popped my email in the chat box.
Excellent. Thank you, Danny. And I can really vouch for Wize Talent. You know, Danny, you've helped me hire so many great people, not just accountants. I've hired marketers and engineers through you. I've hired anything and everyone, really. And you've always been able to source me great people. Okay, and if you want to set up your own Fab 5 KPI, please hit up Raul, and he'd be able to make sure that you can log into your Wize Hub and begin working on your Fab 5 as well. Okay, so for our next session, we're going to be talking about harnessing budgets and capacity planner. That's a pretty important topic around hiring strategy and team strategy. And so someone here today, I think Ryan's not here anymore, but had a question for me. Oh, Ryan, there you are. Yeah, had a question about one team member spending 10 hours on something when it was budgeted for 6, and one of the potential factors there was maybe a need for workflow scheduling, maybe a need for communicating a monthly budget to a team member so that they're not taking as long as they want to do things. This would be the Wize coaching call for you. So make sure to attend this one, and that would be on harnessing budgets and your capacity planner. Okay, thank you everyone for joining us today. On behalf of the Wize team, really happy to be able to share the Fab 5 with you, and hopefully you learned a lot. And we'll see you in the next one. So thank you, everyone, and have a good morning and afternoon.
Yeah.
See you.
Thank
That's
you.
great. Thanks.
Thanks.
Bye-bye.
Bye.